Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. It's been a relatively quiet overnight session. That does not mean we have nothing to talk about, because as we learned yesterday, at the very least, we can fill this show about Beanie Babies and Cabbage Patch Kids. But nonetheless, we do have stocks on our radar. We do want to talk about some SPACs. We want to talk about just the overall market and the feel of the market right now, because it feels like it's at a weird point. So we want to talk about all that. Our guest today is Scott Shellady, AKA the Cow Guy. You've seen him on TV with his signature cow jacket. He will join the show at 8:35 a.m. Eastern Time. Quick programming note. First off, hello to all you people listening on Spotify. Joel says we have a large contingent of you, so hello, everyone. Programming note, today is the day we're interviewing, and by we, I mean Jason Rasek, interviewing Kathy Wood on Benzinga's YouTube channel, 2 p.m. Eastern Time. The link is already there. The stream is scheduled in YouTube, and I'll put the link in the chat so you can ask her a question, submit your question, and we'll randomly select a few to get asked. And that'll be that. 2 o'clock there. Let's throw it to Joel now. Joel, how are we doing in the overnight trading session?
We're up. We're off to highs. Caught a bid right near the close of 67.50. We got up to 38.98. That's just a few ticks from Monday's close. So I'm just going to call this kind of like Seesaw Wednesday here. I don't think big move up, big move down. Looking at crude, that's up 84 cents after dipping under 60 at 60.85. Gold just bearing down on 1,700. We're down $14.70 to 17.1890. Silver, that's going the same way by 40 cents at 26.48. Good day for the cryptocurrency. Bitcoin, that's up over $5,000 at 52,800. That's up 10%. Still off that all-time high, and basis to futures at least. That's closer to 57.5. Bring in Triple D. Triple D, are you falling asleep at your desk here? Because this is a pretty slow morning.
It's kind of stabilized here, but there's actually been some good action. There was good action last night. A lot of tech stocks getting hammered. A lot of those bounced back. So, again, buying the dip and selling the rip is what has been working here. Continues to work. Yesterday, a little bit of a dip overall. A little bit of down after hours on a few stocks. Some tech stocks getting hit, and today they bounce right back. So, just keep playing the chop. We're not in this market where you're chasing stocks and making money. You're in this market when you're fading moves, you're making money. And we're not talking about Rocket. We're talking about the bigger names, and a lot of the tech growth names as well. It's been the play. The fade trade has been working. The reopening trade has been working. The stay-at-home trade has not been working. So we'll talk about all those stocks here today. Should we get out of the way? Do we got to talk Rocket? I mean, it was a big move yesterday, obviously, RKT. A lot of people in our chat own it, so congratulations to everybody who owns it in the chat. If I still owned it, I'd have sold it a long time ago. I would not be getting 39.67. I would have been out, and I did get out. I got out in the first short squeeze in the 24.25, did not rebuy, obviously, so not participating in this move. But, wow, big move. Congrats. You're getting the move from Reddit.
The closing price, that's the only price I can give here. And let's see what your closing price from yesterday, 41.60.
So, obviously, if you can get up over there, the party can continue. Nobody knows where this thing can go. Does the party end today? Does the party end tomorrow? Has the party already ended? Did we already top out? It's difficult to say. RBC downgraded it last night, basically saying all the good news is priced in after this big move. The valuation was attractive down at 20 to 25. It just doubled in 2 days. So, windfall. I book the profits. I sell my peanuts while the circus is in town. That's how I roll. I usually sell too early. In this case, I did as well. But man, when the circus leaves town, these things get ugly in a hurry. So just remember that. But anything can happen in the stock.
All right, SP's leaking a little bit. We're 15 points off the high. Can we just talk Mr. Market here for a second, Dennis?
Yeah,
Because
for sure.
we were definitely looking in the abyss on Friday, right? All those big selling balances,
Yep.
and then you got the good news. The package supposedly that is going to be coming through. Been
Yes.
getting some pretty good news on the COVID front. I see Texas is going into a full reopening starting next week.
Yeah.
Great day on Monday. Monday, they kind of pulled the rug out from me a little bit. I thought it would be more of a fade. You got a little bit of a fade yesterday. So where are we at? I mean, jobs number on Friday. I'd just like to think that that 3,700, that 3,780 that we hit on Friday, that's the bottom. But then on the other hand, it just seems like we can't bust above 3,900. What are your overall market
It's rotation. We're in rotation, and you can clearly see the trade, the reopening trade that we've talked about. There's been for the last 6 months, we've talked reopening trade, stay-at-home trade, reopening trade, stay-at-home trade. This is a full reopening trade that's been going on. The strong stocks, like look at Norwegian Cruise Lines, NCLH, showing strength here again, continues to move up. The airlines have continued to show strength. What has not shown strength? Zoom, off the earnings, good number. You're talking about it at 450. They pulled the rug out from under that and never looked back. You get the Kathy Wood pop here this morning because she can't help herself. She has to buy every single dip that there is on a major tech stock because, she needs to, she has inflows here and she needs to allocate her capital somewhere. And she's always buying the dip. The tech stock that's really getting hammered, she's usually going to buy it that day. So she bought it again. So you get the Kathy Wood pop here this morning, but I keep thinking, is this as good as it gets? We would talk about that with Target. It's why, I was bearish to Target yesterday, and that ended up a little bit, it was a little bit choppy.
Wait,
in the
what
first 30
happened
minutes.
there? What happened there?
Well, that's exactly what we said. It's as good as it gets. How is it supposed to get better?
Yeah, but this thing went to 190 and change.
Well, they got to shake you out a little bit. They don't make anything easy on you. So it rallied a little bit off the opening, and then they pulled the rug out from under it. So, it's still in the digestion period. And
Nothing
we
came
get the
out.
first
They
10,
didn't
15
come out
minutes.
and say anything?
I don't think so.
Wow. Because, I took it off my main screen, and it was like 191, 192, and I'm like...
Stocks don't go straight down, Joel. This is this market. It is chop fest, and you think, okay, you're not going to take any heat. You take heat. There is heat sometimes in this market. And this is one thing about this market, too. If you're using tight stops, you can stop down everything.
Good luck.
Everything. You got to go lower size and a little wider on your stops if you're, because you want risk management still. But I'll tell you, you're getting stopped out on so many stocks because nothing is smooth. But if you're looking for the trend as what has been working and what has been not, those stay-at-home stocks have not been working at all. I mean, Peloton, tough day for it again yesterday. Got a little bit of life the last few days, and they start to pull the rug out from under it again. $171. Now it's $118. You just keep looking through all these names. They're all significantly off the highs. Amazon as well. I mean, Amazon was up at 3,500. It's 3,100. Valuation's still not bad. I still own in the long-term portfolio, but it's a stay-at-home play. And right now, they don't want the stay-at-home plays. They see what you were saying, Spencer, off the hop, too, and you can give those numbers. I mean, you see the cases going down across the country. You see people getting vaccinated. You see older people going on vacations right now because they've been vaccinated. We are in a full reopening trade here. So if you're sitting here and saying, oh, I want to buy Roku. Roku's my stock. This is going to be a nice dip yesterday. This thing's still going higher. I think the better days for Roku are behind it. The valuation is nosebleed. It was benefiting from a stay-at-home economy where everybody is staying at home and watching their Netflix and, and using Roku to do that. I don't see the catalyst going forward here unless they come out and reinvent the wheel. I think rallies in Roku, Zoom, Peloton still to be sold. We've been bearish these stocks for a little while, and some of them we were too early on. But I mean, if you start breaching on Roku, you start going through that 378, it starts to get really ugly.
Look at that. Look
Yeah.
at that. I just pulled that up. It's like, let's just call it spitball at 380. You're quite a ways away from there. I think they got an upgrade from somebody, but that is as clear as you get. You had the gap up here. I don't know what that was regarding in December or, early January. Had the all-time high. You had this little pullback, and we're like, okay, let's go back up. Let's take back half and then move, and haven't done it yet. So besides that 380 low, I think I'm going to keep this one up here, and I'm going to date this one because I do I do like the potential setup here. If this thing can't get back over 435 in a jiffy, then takes out that 380 low. Do like that setup.
I think there's a good setup on the bounces. I mean, you're getting you're getting Kathy Wood bounce and Zoom here today. Zoom had an awful tape yesterday. There was bag holders all over. If you think this could go to 4, you know what? It'd be nice if it went to 400 and give you an opportunity to short it. But you think it's going back to 430, 440, I think you're on the wrong side of the trade. Maybe Kathy Wood's on the right side of the trade here. I'm fading Kathy on this one. I think she's on the wrong side of the trade on Zoom. I think Zoom's going to be substantially lower here by the end of the year. Substantially. Like, to the tune of, like... And again, you know, if we go into this stupid market where we just start ripping everything, you know, bets are off, I guess, and they'll just let all a rising tide lift all ships. But I think the Zoom story has cooled off substantially, and I think it goes ice cold.
Okay.
Don't like Zoom. Don't like Roku. Now, are you chasing the stay-at-home stocks here, or the reopening plays? Well, they've had a pretty good run here too. And you go and back to your original question, the overall market. I mean, you keep thinking, okay, stocks only go up, and you know, but we've had such a run here. That's why I've lightened up, and we know I've been talking about it for the last week. I was fully invested. Got hammered a week and a half ago on a lot of SPACs. I lightened up a lot of the SPACs, and we've had 3-4 times of rallies here that you could lighten up into. And I'm going to say guilty until proven innocent here, because there's so many stocks that are broken, so many growth names that have just been hammered. Under the radar names that, you know, like people have been, you know, like look at some of the, like AYX, look at Fastly. You know, you can go right into the tech growth names there. Fastly's $120 a week and a half ago. It's $70. So now if you're coming and selling, I mean, maybe you're too late to the party, but there's so much damage. The only reason that where indexes are not lower is the reopening trade has held us up. If we lose that, do we just cycle back into some of these beat down tech names? Maybe rotation just continues to keep us higher, and maybe SPY doesn't go lower for that reason. But there has been some quiet carnage in a lot of names here. Do you look and think, oh yeah, let's start, you know, backing up the truck and buying some stocks? So some of the valuations is tough. So I just think I don't want to be out of this market. I don't want to be short this market, but I don't want to be 2-to-1 margin fully invested right now. There's a lot of people who are. I think you keep using those opportunities to lighten up.
Can I ask a question from Camps Potter in chat? Who's they? You say they pull the rug. Who's they?
The market.
Yeah, they market participants, hedge funds, traders, day traders,
everybody who is trading, everybody who is in the market.
Volume.
There's not a specific person.
The Fed is what you're saying. I'm just joking.
Well, you know, but you go back to the Fed, and there's a good point here. We saw, you know, with the interest rates, and they've been making this point that the Fed doesn't control long-term rates. So if long-term rates starts to jack up, you know, it's a serious problem for the markets. I mean, there's always some economist coming out giving you know, but I think we're just overbought. I honestly just think we were way overbought. It was too easy for too long, and you're starting to see some of that trade come in. I mean, a lot of these growth names, you know, and you won't see it on Twitter because nobody talks about their losers, but
no one has
Jemiah, $69. It's $45. The chart looks broken. I mean, maybe it's going to jump back, and maybe, but again, every time we've rallied in some of these names, it's been a selling opportunity. I still own some space. The chart looks like hell. It was $62 a week and a half ago. It's $33. It's a 2-for-1 stock split almost. I should have sold it all. I sold some at 53. Should have obviously sold it all, but I held a little piece because I was like, I want to hold a little piece for the story. And you know what? It gets back $20 here. So some of these names, maybe they're a little bit oversold territory now here too, and people want to just naturally think, what am I buying? I need to buy stuff. But you know, this market, I don't know. I think you just keep trading it. You're buying dips and selling rips, and don't get married to any position. Don't get in something and think I'm going to hold this for the next 2 months because it's going to double. You know, you take your 10%er here, you take your 20%er here, you keep your losses minimized, and you know, maybe you're taking smaller gains than that too. But it's a trader's market right now. If you're holding stuff for too long, you end up losing the gains. And that's why I would book the gains in Rocket too, because it's the kind of market that you hold on too long. If you don't take the gains, the market will take them for you.
Yeah, every scenario in those is much different. And this going back to, because the person put the they question in there like 47 times. If you put an order in the market, if you're on Robinhood, if you're on Webull, and you're putting any kind of, you are they. So there it is. That's just all market participants. And
yeah, all of them.
Some are bigger than others. But that's it. Okay, let's.
I get pretty good sentiment just from even the chat comments, and people still, there's no panic, there's no fear out there. Everybody's comfortable. They're seeing, okay, I've got a few of my Momo names that are down, but market's still healthy, and we know stocks only go up. Everybody's got that in their head. This is how, things, and I don't know if this is the turning point. Nobody knows anything. We keep saying it. Nobody knows when the turning point is, but I don't know that it's not. So that's why there's too much risk factors here right now for me to be all in. And the SPACs too, and we should get onto a little SPAC tangent here too. I mean, we are seeing a lot of SPAC deals. We get another one here this morning, but they are not getting the kind of love that they were getting a month ago. You're seeing SPAC deals pop a little bit on the headline and then actually go red, and we're seeing it in a lot of them now. So most of them are still holding above the 10, and the 10's giving you some life. But if you start seeing some of these SPACs breaching the 10 after the deals, you'll start seeing people get spooked. I've sold about half of my SPACs. I had a pile of them, but there's just too much risk here right now for me to just be all in on SPACs too. I mean, I'm still holding the ones I like. I got the LFTR one. I think that eventually could get a good deal. It's 10.35. If they get a bad deal though, it's not out of the realm of possibility it could breach 10. I'm just hoping they're going to get a good deal. But, it's all about the management teams to a certain extent. But I lightened up. I sold half of my Pershing Square because you know what? This thing just got silly. I mean, it got up to over $34. I ended up selling out at 32, half of it. I wish I would have sold it all. But it's trading still with a 30-40% premium. And we don't know what kind of deal. We assume Ackman's going to get a good deal, and that's why it's trading with such a hefty premium. But most of the premium has come out of all of these SPACs now. And people are spooked. People are spooked because they're not seeing that instant gratification on the deal announcements where we were seeing that before. So if you start seeing some of these SPACs actually breaching 10, you'll start to see, because everybody's got in their head, oh, well, it's 10. It can't go below 10. Well, pre-deal, they don't seem to go below 10, at least not much, but post-deal, they can do anything they want. So you can just ask Clover too, CLOV, and everybody's like, oh, it's 916, it's got to bounce back eventually. You got that social media titan that keeps trying to pump it up. But I mean, this stock continues to make new lows. The earnings were faded as well. Could Clover Health go lower? Absolutely, they can do anything. So stocks don't always have to go up.
Just a question from the Benzinga.com chat, Dennis. Just to clarify, you're not so spooked that you're actively selling. That's not what you're saying.
I'm selling pops, and I haven't been buying much dips. So my portfolio is building cash because I've been selling rips. I'm not selling in the hole. I know they were down 500 points. I'm not using that day to lighten up my portfolio. I used days like yesterday, or the day before. When we got the nice, I just talked about it. I was like, I'm lightening up into the strength. I tweeted it multiple times. I'm lightening up into the strength because this is giving me another opportunity. I sold my NCLH, so I did sell a few of the reopening trades. I switched into Boeing though, so I didn't get totally out. So I'm long Boeing. I took my NCLH money and moved it into Boeing because I like the Boeing setup a little bit better. I also like. Yeah, I like the setup better. NCLH has been running. Boeing's been kind of in consolidation station here, so I feel like there could be a move there in BA to come. I mean, obviously, this always seems like a bad headline in that stock. So, you have headline risk in Boeing.
It did go up off that last bad headline, though.
Yeah, you know what? That's telling me, too. What do you think of the setup in Boeing? I'm long Boeing. I bought it 2 days ago. I talked about it when I was going to buy, like 217, 218. It's more than that. I bought it like last week. So 6 days ago, maybe 5-6 days ago.
Yeah, I think
the technicals don't look bad here.
The technicals don't look bad from just a relative strength standpoint. It hasn't even gone near the 50%, which is 273. Fundamentally, I mean, people are getting back to flying. I just a little, and I've been saying this for a while. I mean, where is the demand going to come from new airplanes? I mean, the ones they've had have been idled for a while. So, I mean, I know that's where the bulk of their money comes from. So, I mean, if I was to start seeing some huge orders for planes, then I think I'd be a little bit bullish. But,
No, I don't even think the market looks at that, though. I think they just look at, we're reopening here. Boeing is grouped into that whole group. And it's this technical setup. This is the dumbest market I've ever seen in my 21 years career. It's the dumbest market. It's all just stupidity.
It
is. Okay, okay, find the dumber market. There has been some dumber ones, maybe. 1999 was maybe dumber. It's a dumb market.
When you see this, like, how far back is this? Is it 6 months? Is it 12 months? Is it
right now?
Right now?
Because in the last 6 months, the frothiness.
Okay.
It's totally disconnected from reality. It has been for a while.
When did Hertz go to $5. That was pretty.
Well,
stupid.
that's okay. The last year, really,
pretty
you know,
stupid.
and you could say that. You could.
You know what? Hertz was the original meme stock. Forget GameStop.
Yeah, you're right.
Hertz was the first meme stock.
It's gone.
Yeah.
Hertz is gone, huh?
Yeah, it's off the board. Yeah.
This market is just stupid. It is. The overall market is stupid. And so that's why you have to be very cautious as a long-term investor. As a trader, you go with the flow, you get out, you're small enough, you can get in and out of the positions, ride the momentum, ride the waves. As a long-term investor, you got to start, like, again, I don't put some of these crazy names. I'm not putting GameStop and Rocket at 40 in my long-term portfolio. You know, if you're buying Rocket today, you're doing it backwards, you know. The time to buy Rocket was, the valuation was attractive back at 20. I bought it as well. I sold it, obviously, on the pop because I just didn't think the story was going to get hot. Reddit grabbed a hold of it. I was wrong. The Reddit story, it did get hot. But there is just a million names. I mean, GameStop is still hanging on at $123, $119. It actually looks like it's consolidating to go higher, in my opinion, you know, from a technical basis. GME sitting here at 119, it makes absolutely no sense. There's people saying it's got to go back down. But you know what? It could kind of squeeze you a little bit more. It doesn't want, the last 3 days, look at the GameStop chart, Joel, GME, the last 3 days. It doesn't look like it wants to go down. So does the GME start ripping higher again, and does that start spooking the market again? Maybe. I think the GME wants to go higher. So I'm not in it. I'm too spooked to get in it. Plus,
Wow.
I just don't want to be in that because it's still like a hot potato. But
Wow.
I'll tell you,
Look at it.
the technicals look actually healthy on this thing right now, which is scary because this is how this market just doesn't care about fundamentals. It doesn't care about money. It doesn't care about, you know, the bottom line. It cares a little bit about growth, but it just cares about a story. I tweeted yesterday, it cares about a story. The GameStop story, it's still talked about on CNBC.
Yeah, but it's.
Times a day.
I think it might be. I think it's really starting to lose mo here. You had an inside day on top of an inside day.
Days.
Yeah, only a 20-point range. You had that 150 million share day on the 25th, and then it dropped to 82 to 49, 34 yesterday. I mean, why does it have to go back to 200 or back to 50? It could just chop the living daylights out of you from 95 to 145.
It's going to be choppy.
Could do that for 2-3 months.
Yeah,
Who
it
knows?
can chop around. Again, though, it's a poster child because it's disconnected from fundamentals, so fundamentals are meaningless here. But the technicals do mean something, and this is where technicals can come into play. When you have no fundamentals to lean on, all you have is technicals. I would say is if you can take out yesterday's high. Again, it's hard to buy stocks when they're ripping. You want to buy the dip and sell the rip. So if you're here and then you put a stop, you go, okay, I'm going to put a $100 stop, and it goes down to $99 on you, get stopped out, and then it rips higher on you. It's a tough stock to trade, which is why I'm not in. But I just say if I'm a betting man, I'm looking at that chart, I think higher if I was just coin flipping it. So that's something to consider. I mean, we're in this market where fundamentals aren't mattering.
Higher lows bodes well, right?
Yeah. I don't think the chart, I think it still looks healthy. Right
134. I mean, two highs in the same area. Besides when it was under 50, you had that scenario. But hey, 133.20, 133.99. Those are your highs the last two sessions, inside days. So hey, 134 could get a little interesting. We'll see if it can take it out. And then it just looks like the buyers are stepping up. 86, 100, then 112.20. So it's winding up.
You know what I've been thinking about? Dennis has been talking a lot these past few weeks and months even.
Just talk
years.
Well, right. No, but about like putting on stupid trades. And what is the difference between putting on a trade because you're dumb or because you think other people are dumb and you want to profit, you want to get in on the stupidity? There's no difference. You're still putting on the same trade, right? Like
I'm participating in the stupid trades.
Right.
You have to almost get down to that mentality. You can't overthink it and say this is dumb. I'm long Bitcoin right now.
Hey,
Bitcoin is stupid. In my opinion, Bitcoin is stupid. It is. You got electricity that's trying, they're burning, there's so much hydro trying to. In my opinion, it's dumb, but it's a story. So I bought this thing at $17,000 not because I'm a crypto believer and we're all going to be transacting in Bitcoin. I believe none of that. But I believe there is a story here, and I believe other people will believe that story. And the only reason I am long Bitcoin right now is because I think the story is still intact. So people want to believe that the financial system is corrupt. And it is. People want to believe that Bitcoin fixes all that. It doesn't fix any of that, in my opinion. but people believe it. So it's investable right now as a trade. So I shouldn't say investable. It's tradable because there's a story there. So anyways, that's, what this market is. So you're completely correct. It's about, looking at what is the next story, what's going to get hot, what could potentially. Rocket gets hot because Reddit grabs a hold of it. It's got some short interest, and it's been on CNBC 100 times in the last 24 hours. So, this is what this market has become. It's not about, and it's sad, but if you're sitting there doing traditional fundamental analysis, it's a tough market because a lot of that just doesn't matter right now. It's about a hot story. But a lot of stories, individual stories, have cooled off, which is why I'm somewhat concerned to just be all in on this market.
Can't be all in, can't be all in cash.
No, you got to have some stocks.
Somewhere in the
go
middle.
all to cash. I never go 100% in cash.
Yeah.
Because here's why you never go to 100% cash. Because or fully short, except for maybe February, March, when I thought the end of the world was coming.
Yeah.
Zombie apocalypse was coming. And then I was like, I'm even losing that because zombie apocalypse came, my cash was all going to be useless anyways. You're gonna need guns and supplies. We're going full Walking Dead in February. But you don't go all in cash because if the world ends, well, the world ends for everyone, zombie apocalypse style. If the market continues to go higher, though, you're getting left in the dust and your cash is becoming worth less. And that's what the problem is. This market continues to get driven because there's people like myself who believe that inflation, hyperinflation potentially even coming, and I think inflation is already around us. And if you're sitting in cash, you are getting relatively worse off every single day as prices continue to escalate around you. The only way to protect yourself is to invest that cash. Real estate, collectibles, stocks. That's what's been working. That trade is still on overall. I think we're just frothy here. Yeah. I think some of the froth needs to come out of the market. So not getting all out, just getting a little more cash to take advantage if the froth comes out.
All right, it is 8:27. We're going to have our guest on, the Cow Guy, in about 8 minutes. Let's do some stocks, though, some individual names. Let's start with Fubo. We're going to have...
Oh, now, you just want him to go from a rant to another rant?
Oh, it's okay.
Programming note, the CEO of Fubo, David Gandler, will be on this very show Friday at 9 o'clock, or 9:05, 9 o'clock, somewhere in that window, 9 to 9:05 Eastern Time. So tune into... That's Friday. Tune into that. This Friday. That's in 2 days. That's in 2 days.
So we can ask him about FuboBet.com.
We should ask him about FuboBets.com. That's exactly right. So this was the headline from yesterday. There was this website, FuboBet.com, that was going around. Benzinga,
it's live. I'm on it right now. It's there.
The Benzinga news desk reached out to Fubo, and they're like, is this legit? And they said, no, not an official page, is what they said.
So at least that's what's, we're finding out. This is not a Fubo page. So what it looks like to me, and this is just this market in a nutshell, is that somebody, and obviously if this page is not legit, we'll ask the CEO on Friday. Maybe it's not legit because it's not fully launched yet or something. Well, maybe there's something else behind that.
They said they were going to launch an app and not a website.
So it sounds to me like somebody created this website.
Let me share my screen so y'all can see what
you can show it the FuboBet.com. Show the site right now. It's up there. FuboBet.com. This was yesterday. This is what drove the stock up 10% in the pre-market yesterday. Because they're like, here it is, Fubo's got the live betting. It sounds to me like somebody created this website, FuboBet.com, to manipulate the stock price higher. If this is not Fubo, then this looks like something. And then they're all flying around and everybody's talking about it and everybody's pushing this. And the story got hot and the stock went up 10% because this site was here. And this site doesn't even look like it's a Fubo site. So at least that's what your sources were saying when Benzinga reached out. So this is this market in a nutshell.
Sources were the company, the company's PR
So
people.
this is not Fubo. Why was this site created? Just for fun, or was there somebody? The stock went up 10% on the site yesterday. Was somebody selling into this pop here on this site that they created? This is completely illegal. If this was done for those reasons. If it was done for somebody just for fun and they weren't selling it, I don't know why you would ever do something like that. But it looks to me like it's a manipulative way of trying to push the price.
Juan Pro
King.
King.
That's actually very sad that we've come to that.
Juan Pro King wishes he had thought of this. Yeah, don't we all?
No, you think of this. No, here's why you don't want to be the person behind this. because the person behind this is low-hanging fruit for a regulator. If this is not Fubo, the regulators are going to investigate this. This has been talked about everywhere. The regulators are going to investigate this. They're going to look at the people who are behind this, and they're going to look and see if they were selling stock into this. If they were, they could potentially go to jail. So this is not something to go and create fake websites to start manipulating stock prices higher. If it's somebody just did it for fun, hopefully that's the case, and grabbed a story, there's probably not going to be an issue here. But if somebody was behind this to actually intentionally try to manipulate the stock price higher and then selling into the pop yesterday morning because of this, regulators would have a problem with that.
News me, what's going on here, guys? Dennis, are you getting
sell the rip, Joel?
We have ADP today, don't we? Because the jobs number is tomorrow.
Triple D, cancel those bids there.
But I don't see anything.
Every time I say that, though, it goes down and then goes back. He goes, I just bought Spider at 37 and sold it at 72. But we're definitely, this is not tomorrow. Good action. This is coming down. The pre-market low is 67.25, and it looks like we're going to be there in about 7.5 minutes. It's
been
coming
this
down
market.
hard.
It's just the same market. It's buy the dip, sell the rip right now. Don't get married to your positions. There's lots of, there's markets where I'm going to hold this for the next week or two, and it's going to go and I'm going to make some money. This is the kind of market where you're holding for a few hours, you're holding for a day, overnight trade, and you're flipping. You're flipping. That's the kind of market that we're in right now. And I think that market continues for a while. I don't see the reason for everyone to all of a sudden just start, ripping into stocks again. There's a lot of carnage in some of the growth names. Some people have been hurt. There's still pockets of these crazy moves like RKT, and there'll be another one. There'll be another RKT tomorrow, a different stock. But you just have to be careful with this market because there is some people who are nervous here about interest rates. And GameStop is a side story as well. As that thing continues to go higher, people get nervous about that too. So a lot of reasons to be nervous. But we already had that conversation.
Can we talk some real news? We actually have a real headline, confirmed headline. DraftKings and Dish have announced a partnership in integration, app integration this morning.
How for what? Why?
For sports betting into, I assume.
Why is Dish Network, which provides satellite television, into sports betting?
Yeah, we're gonna beam.
What's the connection here?
Mitch, you want to speak to this?
I got you. Dennis, this is where you're wrong, man. Dish has Sling
No,
TV.
I'm not wrong. I'm asking you the question. I didn't make an opinion
all right.
either way. I don't know why. Tell me why.
Well, Dish is definitely old. We know the Dish. We can kick that out. But what does Dish have under their belt? They have Sling TV, right?
Great point, Mitch.
Very close comparison to Fubo. And Fubo just made an acquisition for that Balto Sports.
Right.
And so this is where I think you're starting to see the streaming services leaning towards sports gambling. And so you're going to start paying attention to a bunch of kind of different places. What if AT&T starts making a move into this? What if Comcast makes a move into this move?
Or Roku. Like there's no difference between Sling TV, which Dish owns, and Roku. It's the same thing, right? It's the same service. They're competitors. So that's what you can think of this as. Think of this as like DraftKings. DraftKings
what the
content.
hell is going on in this market?
Oh yeah,
it's
look at
definitely
that.
Officially time to start canceling orders.
Yeah, I told you that a few minutes ago.
Yeah, but the one day you
no, there's something out. What's going on? Leon Cooperman's talking about millionaire tax. I don't know if that's hurting the market. Well, what with the ADP that came out?
ADP
we were leaking before this, huh? News me. Give me some news.
I'm looking.
Come on, Benzinga News Desk. Come on, slap those guys aside the head and find out what the hell's going on here. We got to give our listeners the information.
There's not always news. There's not.
That's true.
We are very choppy. We've got hit pretty hard. We rallied up. We rallied up 100 S&P points 2 days ago, and then we got back 30 or 40 yesterday.
Absolutely
on nothing.
Nothing.
Can we get back 20 on nothing? Sure, we can. This is the kind of market that we're in. It's just chop. It's chop and trade the chop.
I don't know. As much as everyone wants to look at Monday as a good day, it's starting to look like a really bad day because it was just too much, too fast, off stuff low, and now they're just saying they're kissing 3,900 goodbye.
It was a gift. We've put in a lot of tops on 3,900, like in 390 on SPY. We've put a lot of tops in there.
Good
so
point.
we're gonna come back to you, Mitch. Joel took us on a tangent.
I'm sorry, Mitch.
But
he's long gone. He's long gone.
No, we need Mitch back because I like this. What does this mean for Fubo, Mitch? Mitch, if he's there.
What ended up happening is we actually got talks on that. So we reached out to Fubo because of the whole kind of talk. And really what's happening here is Dish is looking like they're going to beat Fubo to actually getting towards getting this started. So I think what ended up happening here, in my eyes, this is more of a copycat move in the industry. So they saw Fubo make the move, and they said, hold up, we could do this too. So they started looking for the deal, started looking at some companies, did some outreaching, and I think they just landed a good deal here with DraftKings, a leader in the industry.
Can I outline Fubo's timeline for sports betting?
Yeah.
They're going to launch a free-to-play, some sort of free-to-play app in Q3, first to their subscribers, then to everybody. And a sports book from Fubo TV is expected to launch in Q4. So they're a couple quarters away from the sports betting. But we can talk about all that on Friday. What we do want to talk about right now is the overall market here with our guest, Scott Shellady, AKA the Cow Guy, joining us here on Pre-Market Prep. Scott, good morning.
Good morning.
How are we doing this morning?
I'm all right. It's been an exciting year so far, and I think it's going to continue to be that way for the next 18 months for sure.
Well, it was a quiet morning when we started. It's not as quiet at the moment. We've been leaking, as Joel has been noting, steadily for the last a half hour or so, maybe even more, last hour. I'm not sure what you're seeing out there, but what do you make of the overall market right now and sort of where we're at?
I do agree that it's a little frothy, but I mean, who's to say that it can't continue to go higher? I mean, I have my opinion on the overall situation is this: all the talking heads are calling this the easiest call, since in the history of man. We've got all this money out there that's going to be guaranteed inflation. Here we go, 7% GDP year over year. I just don't think it's going to work out like that. I really don't. And we had Buffett come out yesterday to say that he's not really that excited about bonds. 6 weeks ago, we set an all-time record high as far as government debt priced at a negative interest rate. And then you got the Biden administration in here trying to screw stuff up too. So I think what we're going to see, and this is going to be a good tradable market, but it's, I look at it like a bowling ball going down a boa constrictor's, body. There's going to be this opening euphoria, right? And we're starting to get that again with Texas and Mississippi. But as the whole country does that, but it's still going to take time for folks to get used to being 100% packed. When's the next time you think anybody's going to be really comfortable being shoulder to shoulder in a romantic restaurant down in Manhattan? It's going to be a while, but I think that will hinder the economy. I don't think the economy is going to rip like everybody thinks it's going to, because the media beat people up so badly in March, April, May last year. So I think that we're going to have that, and I'm going to call it the I deserve it economy, right? We've got all this investable cash, spendable cash, whatever. Hey, I just came out of lockdown. Let's take that trip. I deserve it. Let's buy that car. I deserve it. Let's build out of the house. I deserve it. And then when that's done, people are going to wake up with a hangover thinking, wait, we just spent $5 trillion, $6 trillion. We still have the Biden administration in office. I guess we have genderless potato heads and no more Dr. Seuss. I guess that's good. But I think that that's going to be a problem when they finally wake up to that. And I think that's when the real issues come to light.
So what specific sectors, industries, individual names are you most closely watching right now?
Well, I mean, you guys were talking about it earlier. I thought that was really interesting because, well, maybe somebody else was. I don't remember. But it was, I do believe you're going to see rates. Yeah, right. It was probably you guys. It was good. It was good information. It was in the shorter term, rates probably tighten, right? And then, but in the longer term, we're going to revert to the mean or the norm, and that's going to be more like what the rest of the world is. So you've got this situation. It's like that old game when you were a kid where you put that little lead ball at the bottom and try to see how high you could get it up with those two little sticks. I think that's what we're going to be playing here, because in the short term, yes, I think we're going to have the fears of inflation, and that's all anybody talks about. And I tell you, I don't see it really yet. I'm kind of a Missouri guy about it, the show me state, because I've been worried about inflation since 2008 when we had 0% interest rates, right? Since we had ZIRP come in, I thought we were going to have inflation, and we're just not seeing it. Now, we are a little bit more now, but it's more the stuff that you have on your dining room table when you sit down to eat, really. We're seeing commodity quote unquote super cycle, but that's just because we don't have as much as we thought we had. That's not really something that you've seen in the markets as far as. I mean, there's been a little bit of fun money coming from New York trying to invest in a lot of those things because they want to have an inflation hedge, and those things could be inflationary, and they already kind of started to be that way. A little bit of a self-fulfilling prophecy and a little bit of a supply and demand issue, but that to me is not wholesale inflation across the board. So Scott, I think that
I just wanted to ask you too on the inflation topic here. I mean, if we really have this inflation trade, why does gold just not getting any life at all? I mean, gold continues to go down, and you know, if money managers are really all worried about inflation, wouldn't you think they'd be piling into gold?
Yes. However, I mean, I have to take a look at the Robinhood world that we live in today. It already started about 5 years ago, I think, where you've got everybody around the world trading our products here, right? And they've got an app on a phone in India or China or wherever that they can and have access. They can express a view on the U.S. economy via our stocks or our products to trade. And I think that I understand it, but I don't like it. I see more of this inflation hedge moving to Bitcoin and leaving gold, which I think is insane. But that's been the trade of the year, because more folks believe that that's going to be a better hedge against your dollar losing value than gold right now. I don't think that's the case. It's too volatile. I wouldn't call it a hedge against anything. But that, I think, is what's been stealing a lot of the thunder, pushing gold to the back pages and putting Bitcoin on the front. When that slows down, if people realize that might not be the case, I'm not a gold bug, but I think that you'll slowly but surely see gold act more like it should.
We're on the line with Scott Shellady, AKA the Cow Guy, joining us here on Benzinga's PreMarket Prep. Scott, I just want to ask you, Dennis and I, big proponents of the big stocks, of the big cap stocks in the S&P 500. The top 5-6 stocks make up like 27, 28, almost 30% of the index. And they're not going up, and they're certainly going down. Those are the stocks that led us out of the abyss in March. Can the market continue with its just relentless move higher without these stocks participating?
No.
That's a good short answer.
I mean, look, talk about all this money on the side, this investable cash on the sidelines. The M2 money measure. We've done so much work and done so well. I mean, I don't know about you guys, but I've been in the business for 33 years. And the rip that we've had since our COVID lows last year, I think has been stupendous. And yes, we've had some pandemic winners. We've had a lot of pandemic losers. I say that the headlines look rosy, and that's why the talking heads talk about inflation as much as they do. That's why they talk about this market ripping like it has done for a long time. But at the end of the day, we have not addressed the fact that I go to Chicago 2 to 3 times a week to do TV. It's getting a little bit more crowded, but those buildings are still only 10% occupied.
I know.
And if they're only 10% occupied, there's no customers down there for all the businesses that are down there. So you've got the canyons of New York, the canyons of Chicago, and any other big city, whether it be Houston or they've been wiped out, right? And those mom and pop shops, and you know what I'm talking about, there's 5 or 6 shops on the concourse level with all those big buildings. They're not coming back. The shops on Main Street and your small towns in America aren't coming back. But we haven't really taken stock of that right now because we still have a lot of money going out as far as unemployment. And we have 18 to 19 million people still on some sort of assistance. So that hasn't really sunk in. And I think that's why I said earlier, we're going to see this opening euphoria. We're going to see the I deserve it trade. And then suddenly, maybe not suddenly, but slowly we're going to wake up to the hangover like, hey, we got a lot of people that still are out of work that used to have jobs. I mean, how many businesses have gone out of business this year that made it through the Depression in 1929 and 1930? So we've got a lot to take stock in and a lot to deal with. And that's why I think that this thing slowly but surely sucks its oxygen out of itself. And it can't really do that until the market can't really go a lot higher until we have to come back a little bit. We have to have some semblance of reality. I understand why people are so excited, but there's such a psychological aspect built into this market. Like you said earlier, I heard you say that it doesn't act, you can't sit down and do your points and figures and charts because it's just not that type of market right now. That's because it's a psychological market.
What does it take to break that psychology of this buy the dip mentality? Because this is really what has held the market up more than anything. I mean, every time the market dips, people are being rewarded for doing it. What does it take to break that?
You're right. I mean, it's been, I got to participate. I got to participate. I got to participate. That's all you hear. FOMO. You know what? That you'll participate until it doesn't pay. And so we're going to have to see a sell-off. And, whatever it's 5%, 10%, I wouldn't care. I'm not retiring tomorrow, so that's why I don't care. If you are retiring tomorrow, take advantage of this. I mean, this is, just be careful and have yourself covered, because we need to have some sense of reality come back to it. And I've been around long enough to see markets that have left reality for a little while. And this is not really reality. I think that we need to see some sort of correction, because the rest of the world is still struggling. I think that the U.S. is a much better country than the rest of the world, but that doesn't mean we're going to fly as high as we've been flying. I think we need to come back down to earth a little bit, and I think that could easily be a 5% sell-off, and I wouldn't think that's a big deal at all.
Scott Shellady has been on with us. You know him as the cow guy. You've seen him on CNBC, on Fox Business, with his signature cow jacket. Scott, as always, it's been a pleasure. Thanks for the time.
All right,
Thanks,
guys,
Scott. We'll get you back on again soon. Really enjoy your commentary.
All right, man. See ya.
All right.
Thanks, Scott.
All right.
Best dressed guest on the show always.
Always. That goes without saying. He's the best dressed guest. That goes without saying. Okay, let's do some more tickers here. A couple from the chat that I wanted to get to. I'm just going to go through.
Somebody was asking me CRM earlier.
We did. Joel and I discussed this one yesterday.
That's trouble.
That's not looking
Danger.
good.
Real so people thought, I did. I sold at 230 something, and it ended up. I bought back in the dip back. In early January.
Yep.
I sold early again. I was out in the 230s, mid 230s.
Holy
I don't know why. I don't remember why.
What's going on here?
I don't remember why, anyways, on CRM that I sold it. There was something that's spooking me. But anyways, it went to 250, so I sold way too early. Now it's broken. This stock is for sure it's broken. I mean, this is a nosebleed valuation too. Could this thing come into under 200? I think so. I think if you're buying CRM, I think you're early here.
I mean, I'll just give you just a classic. I mean, you just, like, I had the line here. That's where you did have the lows, but I could just move it down here. And you're hanging out here too long. When you hang around too long, you go down. And I could give you a classic example here. I mean, I could probably go to 100 stocks, but look at this gold market. Just kicking myself here. I mean, you had this support, right? You had the support. You came down. You had these days like, 1750 is going to hold. 1750 is going to hold. And you know what? It didn't hold. Tried to rally back up to it. Couldn't get there. So when you hang out is it going to be an undercut and rally? You can always bank on that, or you can't bank on that. It's something you can look for, but this just looks heavy, and it's got sold off after earnings. So be careful. Be careful on this CMRM. Whatever the low of the move was here, it's going to take it out today.
It's possible.
It may take it out. There's a possibility that investors will see this take out the low of the move.
I think it's going lower. Just our opinion.
Yep, that's it.
All right, let's do some tickers from the chat. Start with Teledoc here.
This is a reopening trade. So I haven't looked at this chart for a while, but sorry, not the reopening. This is a stay-at-home trade. So this chart is not surprising at all. I haven't looked at it for a few days, but wow, what a gift! This thing went to 300 a week and a half ago, and now it's completely broken. You get down to 200, you probably find support at 200 because that's where you kind of consolidated for a month. So I think there is some support about 20 points below here. But this again, okay, so there's two things. Kramer's been, tooting its horn saying, well, this is the future, this is where, people are telemedicine. And I believe in some of that as well. But there's some froth in here, and there's people who are staying in this saying, like we're scared to go to the doctors. We're not scared to go to the doctors maybe in a couple months if everybody's getting vaccinated. So this is just being grouped in to all of them, like as, this is stay-at-home stocks are out of favor. So this is out of favor too. So rallies so I'd say guilty until proven innocent. I would sell rallies into this. I do think it's eventually going to 200. I think it could bounce. Is there a spot where I'd be like to be long Teledoc? Maybe that 180 to 200 is the level. But you've come this far, why not go all the way down there? So I think eventually it does test that 180 to 200. If you want to take a shot there, it's up to you. I think if you're buying at 217, I think you're early.
Hey, I wonder if I know Jeremy talked about this one and it did go lower and then it ripped. And I wonder
He was
if,
in it for a while. I don't know if
yeah,
he
he
got
was
out
in
or
it for
not.
a while. I hope he went cha-ching
He,
here.
but you know what? Jeremy is one, and this is why Jeremy Newsom is a fantastic trader, Joel, because he will get out if the charts start to break. He takes losses. This is what makes you a great trader. It's not your ability. It's not. And I know we're like a broken record here, but we're trying to teach stuff here because it's been so easy for so many newbies that I just hold on, my stock eventually comes back. That is eventually going to be the recipe that will make you lose a lot of money in this market. This market has taught us so many bad things. The reason Jeremy Newsom makes money every month
because he
is
loses
because
money
he cuts the
sometimes.
losers.
Yep.
And when the charts break, he gets the hell out. I would highly doubt. I bet you he's not in it. Because when that would have started breaking down through 280, he'd have been like, too weak. I bet if we asked Jeremy, I bet he's out of this.
Maybe we should special ring him or something, bring him in. Well, the only thing I'm saying
Risk
this
management.
one, and I hadn't looked at this, but when you get these kind, and I know it's so hard, like this thing. Okay, man, we cleared 300. This baby's going to 350. I'm not selling. I mean, last month you had a monthly high, which was the all-time high, which the market did not hold, right? And that was 294.74. That was in January. So it goes to when it went to 308, 306. All right, so you let it go. Like maybe it's going to go to 310, 320, 330, whatever. But man, that's still a good number just because it blew by it by $13, man. When it came back down through 290, it was one day it was up there. And then let's see what this high was. That other high, 294.94 on this day before it really got slaughtered. So, sometimes when you have moves like this, you're not sure what to do. Go longer term. Don't get your 5-minute or 10-minute or 15-minute or your weekly. Go to your monthly and say, wow, last time this thing got near 300, it didn't do very well. Wow, it's not back here again. A lot of people got their money back on this one while things were getting better during the pandemic. So that's on the upside. That's history. I see this 198 to 200 area, Dennis. That looks like this one has a date with it.
What about? Oh, someone in chat noted that Jeremy tweeted that he got out a month ago. Teledoc. So that answers
is he listening?
That.
No, somebody just knew that.
Someone just knew that.
And you know what? We know Jeremy so well. I look at that chart. I was like, no way, Jeremy's in that. So look when he gets out. He got out a month ago. So he would probably. You know what? He sells.
He might have been early.
When the circus is in town. I bet Jeremy was selling it back when it went from like 240 to 280 in like 2 days. He'd be like, okay, this is overdone. That's what he does. And you know what? That's why he's a great trader. And you know what? You got to look at this. When you see those moves, go back to the chart of February 22nd and February 25th. You see those two huge gap ups, and you look and you're like, oh yeah, this is going to rip to 500, 600. And the FOMO really sets in. That's when good traders are like, time to book the profits. Time to make the donuts. Well, this is it. And that was the time, 240 to 290. That was the time to sell. Did you get out at the top? Probably not, because it went up to 308. But you know what? You're not getting hit here now. So if you're buying it here now, you're buying, on weakness. You're trying to buy the dip, but the chart's broken. I mean, the trend is broken. Trends start breaking. It's not that good. And there's a lot of crowded people still in here believing that, oh yeah, this is the future of medicine. Kramer, this is the future. Well, right now, there's a reopening trade happening, and this is not part of it.
What about MP Materials? This was a SPAC, and it never really stopped going higher. It's at 50, it's 49
Yeah,
now.
one of the few, eh? Because there's
MP,
so many SPACs that have been absolutely murdered, and this one hasn't stopped. That's good. Relative strength is good. I don't follow the company close enough to tell you anything about the fundamentals. I know nothing about it. It's one of the few SPACs that have held up. So you can read that two ways. One, you can say it's great relative strength and it's going to continue. Or two, this is maybe, one eventually that could fall off too. I'm not going to even make a call on this one. The trend is there. The trend is still your friend. I would say if it breaks trend, gets down below 40, I'd get the hell out. So if you're bringing up your stops, maybe you're giving yourself, maybe you bought this at 10, you give yourself and you say, okay, well, the trend is still my friend. Take your Jeff Mackey purple crayon. Hi, Jeff. Take your Jeff Mackey purple crayon, draw your line, and if it breaks that purple crayon line, then get the hell out.
I would just say keep an eye. Don't worry about the all-time high, which made yesterday. We're traded up to 52. Just keep an eye on the all-time closing high. And where that stands right now, that was at yesterday's close. Yesterday's close was 49.44. So just want to keep improving on that. And, if you get a day at 49.21 and then it has a day at like 49.66 and then it just kind of hovers there, then there may be a turn. But Bennett improved on the old-time closing high by over $3 yesterday. Let's see if it can do it again today.
Someone else asked about WW. They had earnings on Thursday, and they haven't looked back.
Holy cow! Why?
I know.
Why?
30 got it. I think it closed at 35. Or
Right,
no,
getting a hold of this one.
It hit 35 at 4:00 this morning.
This has been prone to ridiculous short squeezes before. We have seen this. I don't know if there's any short interest in this. I don't know. I do trade the stock every once in a while. That is such a wicked rally.
I'm seeing 13%, not crazy.
That looks
high,
like a bit of a short
low.
squeeze to me when it's that
Sure
ridiculous
does.
of a rally. Yeah, it does. There's something short. Like I don't know the short interest, like I said, or anything you're saying.
13%. 13%.
Yeah,
That's
so
all right.
I think a little bit of a. And when did it have earnings? It already did, or has it?
Yep, Thursday. Last Thursday.
Last Thursday. So this is the gap and go off of the earnings here. It's been running and running. I mean, wow, nice. It's got all the momentum. There's absolutely no reason to short a stock when it's ripping higher like that. Do I sell my peanuts within circuses in town? I do. I always sell too early though, so this thing could continue. I guess you bring up your trail, your stops up. Maybe it's a better strategy. Chasing it here now though, tough.
All right, let's do a couple more tickers. Discuss the Target sell-off. We did that.
Wow. No, did we?
Didn't we?
Oh
Didn't
no.
we?
Yeah, we did.
We talked pre-market show. I'm not sure if we talked.
All right,
about it.
I
I was
maybe-
bearish the stock because I thought that we got the reopening trade going. I thought, we saw it with Walmart, Amazon, UPS. We saw a lot of the Zoom. Now it was Zoom yesterday, same time. But we just keep seeing this trade where the stocks were benefiting from the lockdown. Target being one of them, I believe, as well. They're kind of borderline, I was saying, but it's just a lot of good news priced in. Is this as good as it gets? And it had a little bit of a shorts, or had a little bit of a. It wasn't an easy short because it was like 188, and then it ripped up to 192. Then they pulled the rug out from under it. So. Short's broken. That's broken now. You're buying it now.
Yeah,
Holy
I was
mackerel,
going to
buying a
say,
broken chart.
I don't know if it's going to 185 or where it's going to go on a bounce, but
I would be selling it at 180 if it got back there. I'd be
that's a
selling it all the way. You're going to have a lot of bag holders trying to sell
That's
this
an
thing.
ugly candle.
Ugly candle.
Yeah,
That's
you
a
had this
candle
ugly
you
candle
you sell
here.
strength into.
Yeah,
if you get strength up to 178, 180, I think you get out.
This is a bad candle here, and it made a higher low and rebounded. But now, then you got the people chasing it here. Oh, did I say this yesterday? Like maybe a head and shoulders on top of a broken head and shoulders here. That's a bad candle. I just don't. And the fundamentals are out, right? You already had earnings. What's going to be the catalyst? What analyst is going to crawl out from under his desk and upgrade this stock or raise his target price? They'll come out and say, "Oh, my target's I'm going to raise it from 140 to 185." Well, fella, it already traded 185. What the hell am I supposed to do now? So I don't see what the catalyst is. And also,
look what Walmart did.
Oh, I know.
Walmart gapped down
I know, that's
on
why,
a good report, and look what it did since. It's lost another 8% since then. So that's a lot of people sitting in Target. I wouldn't want to be in it. I'll just say that. I would not want to be in the stock.
Have you guys looked at Discovery? We looked at that last week, and it was like at 50 or 51.
They're nuts.
And
man.
now it's at 60.
AMCX. You can go through all of these
It's
media
insane.
companies like that have their different stations and different content. They're all Viacom, Discovery, AMCX. Obviously I used to go to CBS, but it's part of Viacom now. They've all just ripped and ripped higher. I don't get it. I talked, down Viacom 4 days ago, I had one ugly candle, and they turned around and started buying it again.
Right back up.
Valuation is okay. Maybe it's the reopening trade. Maybe it's just the fact that we're going after value stocks, and a lot of these had P's of 6, 7, 8 when they were down, 2.5 months ago. Well, they've all went to P's of 16, 17, 18, and it's still relatively cheap to the market, but man, it's been a hell of a run. I think a lot of these businesses aren't as good as the market thinks they are. I would sell my peanuts while the circus is in town on all of these things. Again, maybe you take your Jeff Mackey purple crayon, draw your line, and you keep, trailing up your stops as that line comes higher. And if it breaches it, then you get out, because that is a beautiful trend line in DISCA. So you could draw the line. You could say, okay, well, I'm around 53 right now, so I'm going to keep, just bringing up that stop. So maybe the party continues. I mean, they've got the momentum. Who knows? Reddit grabs a hold of different stories, and they can get behind stocks too. Right now, the momentum is on their side. But man, this has been an impressive run, and I just think, wow, if you've been in these things and been dogs for so long, why not lighten up into some of the strength?
Let me try the old trend line trick again, because it broke it last time, but it snapped right back. Oh boy, this is a tricky trend line. I guess if you want to keep your come on down, right, boom, boom, whatever that low is right there. The 3-day low, I'd keep an eye on that
That's
one.
Viacom you got, but yeah, Discovery,
yeah, 61. Yep.
They're all the same.
The same chart.
They're all the same. They all move together. The pairs trade. We talk about pairs trading. Rob Friesen. We're going to bring Rob coming on this week. You said, I think, on the show?
He was on yesterday. We had a little trouble getting him on. We're going to get him on again today.
Okay, so yeah, like Rob Friesen. These are all pairs. These Viacom, Discovery. Obviously, I used to always do CBS and Viacom. I was kind of sad when they merged, because I used to like trading those against each other. But these are pairs. These are relationship-based stocks, and I trade all these things against each other. Meaning long, you see one start ripping, you grab the other one. So there's like 4 or 5 of them that, obviously all move together.
Since we can't go a whole show without mentioning Cathie Wood's buys and sells, really quiet day for her yesterday. Only 21 trades. I can't remember the last time there was that few trades from the ARC family in a given day. It was mostly buys. There was 1, 2, 3, 4, 5 sells. So 16 buys and 5 sells. Nothing new that I saw.
I didn't see any new ones either.
Yeah.
Zoom was the most notable. I kind of thought Zoom. I was going to buy the close on Zoom just because I thought Cathie might come in and buy it.
And she did.
I think I actually had an order. To buy it. I think I'm pretty sure I put it in.
Quarter
I
million,
couldn't.
quarter
I must have
million
panicked
shares.
out because it closed near the lows, so I must have panicked out and not put it, or I forgot about it. But I thought to myself about 3:30, I should buy some Zoom because probably Cathie will come in and buy it and it'll get the pop.
Yeah.
And I forgot to do it. So shame on me, because I would have made 8 points right now. If I was in this Cathie Wood pop, I would be selling it right now as fast as I possibly could, because I don't think the Cathie Wood pop lasts. Could it go? But again, Palantir went a lot further than I thought it could too. This gets back anywhere near 400. I think it's a short. So yes, I said the
what we
evil
should
word
do?
short. Gets to 400. I think you short it. This is my opinion.
And I know this is like
If it gets there,
a super like crazy time for you, but it'd be great if you can come on just on the afternoon show at like 3:58, and we'll do a little segment. What would Cathie do? And then you just say.
Well, that's what traders are doing. Like, they anticipate that.
Yeah.
And, the big tech name that she holds, when it's hammered, she's usually buying more.
She's in there,
She's buying the dip. She listens to PreMarket Prep, man. She buys the dip. She's the biggest, not we're just joking, but maybe she does. She's the biggest buy the dip person out there. She's buys heavy. Every time you look, when she's doing new buys, it's never when they're going up. It's always when they're pulling back. So that's smart trading. She's a smart girl. We're going to have an interview, obviously, with her.
Yeah,
Maybe
yeah.
This is
Braz
a
has
good
got her at 2
segue.
o'clock.
What time is that?
It's at 2 o'clock. I'm putting the link in every damn chat that we have right now. There are a lot of. We got to figure out exactly how we're going to narrow down these questions, because we got like 1,000 questions for her, and not time for 1,000 questions. So I don't know exactly what we're gonna have to cut, but we've got a lot of questions. We've taken questions from the company, questions from all of our viewers who can submit their questions on the link I pasted earlier. I just pasted the link to the stream in all the chat, 2 o'clock Eastern time, and it should be fun. Everybody has a question. Is the takeaway? Everybody has a question for Cathie. And we're going to try to squeeze as many of them as we can. What we'll end up doing, I think, is we're going to have Cathie on, and then after Cathie has to hop, we'll just hang out and digest the interview and talk about what
you should do. You should try and curate. Like maybe some of the questions are the same, so you can satisfy 87 people if you ask this one question. Everyone's like, "Oh, they asked my question," but
right?
Really,
exactly.
Everyone else asked a question.
Exactly. So everybody's got a question. So we're gonna have to figure out how to narrow that down in the next few hours. But in the meantime, I want to wrap up today's show. Thanks to our guest Scott Shellady. Thanks to all of you in our chat. Every show of PreMarket Prep is available as a podcast. I mentioned Spotify at the top, but we are also available on iTunes, Google Podcast, Stitcher, SoundCloud. I think I named them all. I think that's it.
Did you say Spotify?
I said Spotify. Yep.
Okay.
So that's where we are available for all of you people listening via podcast and can't see what's up on the screen right now. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Everyone smash that like button on YouTube or Facebook, wherever you're watching the stream. And it's going to be a wrap. So here's what we're going to do. I'm going to hang out for a few minutes. We're going to do separate streams in the morning and then one long stream in the afternoon for Kathy Wood starting at noon. Dennis, Joel, guys, thanks a lot. Joel, I'll talk to you later with Rob Friesen from Bright Trading.
Yeah, and if you get a chance, could you drop that link that we had yesterday to
I will
this
make
webinar?
sure. Yep,
Thank you, sir.
I'll drop the
Everyone,
link and I'll make sure Rob gets the link
have a
as
good
well.
day. See you.
All right. See you, Joel. See you, Dennis. He's waving as he's doing that. All right. Sorry we couldn't get to a few more questions, but we got about 10 or 15 minutes here before our next stream will start. Again, that's Get Technical with Neil Hamilton. So the way if you've been watching our content, you know we've been experimenting a lot. We're doing different formats, trying one all-day stream, 10 different streams. Yesterday, we did both at the same time. It was kind of a pain in the butt. What we're going to do today, as I just said, is separate streams in the morning. So this stream is going to end, and the next stream will start. And we'll do that until noon. And from noon onward, it's going to be the same stream. Power Hour is our noon show. That's going to go right into Kathy Wood, which will go right into PreMarket Prep at the close. So just one stream from noon. You can see that link. I pasted it in chat. It's in the description. Should be. Actually, it might not be. But if you go to youtube.com/Benzinga, you'll find the link. It is scheduled to start at noon. That's going to be the only link to watch our content for the rest of the day. So we've got PreMarket Prep, Get Technical, and then don't forget SPAX Attack at 11 o'clock. I want to mention SPAX Attack too, because we've been talking about this Kathy Wood interview like all morning and all week, but we have another big interview today. The CEO of Omnichannel Acquisition Corp. The ticker is OCA. Matt Higgins is his name. I do not believe they have a target yet. And so we're going to be talking with Matt at 11:15 Eastern time about what they're eyeing, what kind of companies they may want to buy, and about valuation, right? We talked about it on this show today. Is a lot of these, or maybe we talked about it before we hopped on. I don't even remember at this point. But a lot of these SPACs are paying a premium, right? They're paying up for these private companies. And it's fine as long as the SPAC gets that that deal pop and people are able to sell. But at some point, the valuations are going to start to matter. So we're going to talk to Matt Higgins from Omnichannel. The ticker is OCA about that process, about how do you make sure you're not overpaying for a company, those sorts of questions. So that'll be at 11:15 p.m. 11:15 a.m. Eastern time. Again, youtube.com/Benzinga. The stream is scheduled for that. I think that was all the housekeeping that I had to get to. Stephen Hotchman, why can't we stay here after the open for an hour? We can talk about that. We're still trying to figure out what our full day of programming looks like. I know somebody said they want a 7 a.m. show. That would be something that we'd have to work on. I don't know if we have anybody who is available to do a 7 a.m. show right now. I know Dennis can't. He's too busy trading. I don't think Joel can either. But if there's enough demand for it, we will find a way to make it happen for you. So I know people have asked about more 7 a.m. show. People have asked about afternoon and evening shows. We are still trying more shows. I know somebody mentioned the other day actually a few people mentioned they want to see a fundamental analysis show, how to do DD, how to do research. We're going to start that next week. We're going to have a fundamental analysis show with a former Merrill Lynch managing director, now turned VC. He's gonna walk through his fundamental analysis process and how he looks at companies. So we are always taking feedback, always figuring out what we're missing as far as programming, what you want to see, and trying to make it happen for you. Why do I have an Oscar statue behind me? Because it's Oscar season. It's Oscar season. That is why. I will move the statue whenever the Oscars. I don't even know when the Oscars are, but whenever they are, I will move that. Unfortunately, I have exhausted the the wooden cutouts. I had Rocky behind me, I had Seinfeld behind me, and I had Adam Sandler behind me. And I'll be honest, guys, that's it. We don't really have any more. So the Oscar statue was kind of my last resort. So okay, enough of that. I'm told that the Get Technical stream has started. The link to that is pinned to the top of chat. It is also in the description of this video. It's at the very top of the description. Get Technical with Neil Hamilton. I think he just wants to hang out, and they were just posted again. I think he just wants to hang out until into the open and then start his show for real at 9:30. Is Neil my boss? Neil's not my boss. I don't. Well, Luke is everyone. Luke is my boss. Luke is everybody's boss, and Jason, of course, is everybody's boss. Luke and Jason. I don't know if Neil can't hear me, so he's doing his own thing. So no, Neil's not my boss. If anyone hears that, don't tell Neil. Okay, S&Ps have rebounded, or at least stopped going down for now, which I guess is a good thing. We're at 38.62 and a quarter on the S&P 500 futures, but we are in the red across the board this morning. I'm looking at the S&Ps, I'm looking at the NASDAQ futures, and I'm looking at the Russell. Actually, the Russell's in the green. That's interesting. Got to keep an eye on the Russell, guys. The Russell's been a beast. NASDAQ in the red, S&P's in the red, Russell in the green. Okay, that'll be a wrap for this stream. Again, Get Technical is live. The link is in chat, in the description, also on benzinga.com or youtube.com/benzinga. Guys, thank you so much. Hit that like button. Smash the like, please. Please, please hit that like. And I appreciate that. I appreciate all the feedback. I'm going through the chat right now. And that's what I got. All right. I'm going to hop off, guys. Get Technical with Neil is live now, starting for real at 9:30. And I will see you all in that stream. What are y'all doing here? Get over to the other stream. There's 900 people in this stream now. Why? Why are you still here? I'm leaving. Go watch Get Technical. The link is in chat and the description. Thank you.